Hey everyone, welcome back to Corporate Decoder. Today we're diving into Hughes Satellite Systems Corporation's annual report. This one's got a bit of everything from the usual financial figures to some interesting risks involving space weather and cyber attacks. Let's see if this report is as clear as a summer night or as cloudy as a satellite dish in a storm. Hughes Satellite Systems filed its annual report on Form 10-K, which gives us a deep dive into their performance and activities for the past year, specifically ending December 31, 2024. The company provides broadband services and network technologies and managed services all over the globe. Let's break it down. Hughes is operating as a single business segment focused on networking technologies and services. They're trying to grow by focusing on new technologies and services for consumers, businesses, and governments worldwide. They want to maintain their leadership using satellites, technology, and global reach. This report contains forward-looking statements, which are essentially educated guesses about the future. It's important to note that the report includes a summary of risk factors, basically a list of potential problems that could affect the business. Let's go over some of them. They admit to facing intense competition in broadband services. This is a big deal because if they can't keep up, people might switch to other providers. They also worry about changing consumer behavior, which could lead to fewer customers or customers buying fewer services. Another key risk is technology. If Hughes can't keep up with new technologies, their services could become outdated and people won't want them. Basically, they need to innovate to stay relevant. Operational risks are also mentioned. If their service quality drops or customers aren't happy, they could lose subscribers. This highlights the importance of good service and keeping customers satisfied. A big concern is satellite capacity. They have limited space on their satellites and any failures could really hurt their ability to provide services. This is a constant worry for satellite-based companies. They also acknowledge risks from their international operations. Dealing with different regulations and currency changes can be tricky and expensive. A modern risk involves cybersecurity. Any successful cyber attacks on their systems could disrupt their operations. In today's world, protecting data is crucial. Debt is another major risk. Hughes has a lot of debt, and that could limit their ability to grow or handle tough economic times. Government regulations also play a role. They rely on licenses from the SEC, and any changes or problems with those licenses could disrupt their business. Okay, now let's get to the actual numbers. These tell us how the company really performed. I'm going to scroll down to the consolidated statements of operations. That's basically the income statements. Total revenue decreased from $1.74 billion to $1.56 billion, a decrease of 10.7%. So they lost about a tenth of their income. Their cost of services increased by 25.9%, which is not good, and selling, general and administrative expenses decreased by 14.6%. Their income tax numbers are all over the place because there is a tax law change for that year. But bottom line, net income loss attributable to Hughes Satellite Systems changed from a loss of $461 million last year to just a loss of $209 million this year. They also lost some subscribers, going from 1 million to 0.883 million, which is a 12.1% decrease. That's over 1 in 10 subscribers gone. They talk about market risks. Their investments and debt are exposed to market risks such as interest rate changes and fluctuations in foreign currency that could impact the fair value of their assets. They also acknowledge that the global socio-political environment with its polarization and volatility could negatively affect their business operations and reputation. Lastly, we should talk about controls and procedures. It's management's job to maintain adequate internal control over financial reporting so that everything is accurate. They claim that their controls are effective and that there have been no changes in internal control over financial reporting that would materially affect the company. They do their best to secure their networks and systems, but recognize they're subject to cybersecurity threats. So what's the story here? Hughes is trying to navigate a tough market with increasing competition and technological changes. While they're working to innovate, they face risks from their debt, international operations, and potential satellite failures. They've made some gains, decreasing their overall losses, but the subscriber losses and rising service costs are definitely worrying. They have lots of debt as they continue to invest in their business. Covenants in their indentures restrict our business in many ways. We are left with a company in a tough but stable spot, but also faces significant challenges, and it may not be for long. Thanks for watching, and remember to like, comment, and subscribe for more corporate deep dives.